So good morning and welcome to the Introduce conference call with Danish-listed Green Mobility. My name is Aktier, analyst at ABG, and with me I have Anders Well, VP of Investor Relations of Green Mobility. You should have the company slides in front of you, so thank you for being on and welcome to Anders. Shall we begin with a walkthrough of your equity story, please, Anders?
Thank you, Laurits, and thank you, everyone. Good morning and welcome to Green Mobility. We are a sustainable car-sharing company, meaning that we work entirely with electric vehicles to benefit the city environment. Green Mobility is founded on three megatrends, so the urbanization, the green agenda or sustainability, and the sharing economy. As we are all moving into the big cities, and if we keep bringing private cars with us, naturally the problems that we have will increase. Problems like parking, pollution, noise, and so on. That is something we have to change. At the same time, we have to have a better city environment with cleaner air and a better environment for future generations. That is something that the sharing economy, who's been with us for the past few years and growing tremendously, is something that we can accelerate the change in mobility with. So for Green Mobility, this is what we're looking at. Improving and reducing private cars in the cities. This is something that politicians all around is looking at the moment. And this change has accelerated dramatically. When we go back a few years, cities and countries around Europe, around the world, set clear climate goals on whether it was for 2025, 2030, on how much CO2 emissions they had to bring down. Still, at that time, it was very new. How did we actually have to do this to achieve it? Today we see that mayors, prime ministers and so on, they are actively putting measures and actions into action. Green Mobility is a big part of this. We have a solution that actually can impact mobility in the city and in an environmentally friendly way. One of the things that is needed in order to solve problems in the city is ultimately to remove private cars, which can be scary to many, but the foundations to actually do that is to have alternative types of mobility. A lot of it is already in place. We have what we call long-distance traditional public transport, trains, buses. We see a lot of short distance, like bicycles, kick scooters, and so on. And then we have the traditional mid-distance, typically 7-8 kilometers. This is what Green Mobility offers. But this is also how we replace private cars. So when we have these three in place, we don't really need private cars anymore. And that may be sort of scary to many, but this is actually the direction we're going in. Maybe for longer distance outside the cities, you will still need private cars for a while, but within cities, we need to dramatically reduce the number of private cars. And with these three in place, we actually have that already. From our operation in Copenhagen and other cities, we see already now that we are able to reduce private cars in a ratio of 1:4, meaning for every electric share car we bring in the street, 4 private cars are sold. And additionally more are postponed and purchased or so on. Green Mobility, we are a Danish car-sharing company. We were founded in 2016, and today we are operational in 4 cities here in Denmark and in Sweden, so Malmö, Gothenburg, Copenhagen, and Aarhus. We were listed on Nasdaq in 2017, and since then we've seen tremendous growth, and this is just continuing. As of today, we have active plans of entering Belgium, which is actually going to be done later this month in Antwerp and Ghent, and the same for Helsinki later in the year. We see a lot of potential around Europe. I'll get back to that in a little bit while. But here in the map, you see the current cities that we're in. An important part for Green Mobility, of course, is the CO2 that we are saving by using our entirely electric fleet. This is something that we are measuring on a daily basis. Currently, we have 700 EVs in operation and expecting to have a fleet of 1,100 EVs before end of year. And if we look a little into how the performance has been for the past period and essentially back to when we started, we have this, this graph. I think it shows very well the activity of the company. This is what we call active customers over essentially back to when we started. And here you see the natural activity level. We have seasonality, classic when we have Christmas period, summer period, and so on. So that's actually quite well. We saw last year a dip in our operation due to a platform that had some problems for us. So over here by the figure 1, we chose to change our platform. We actually took the entire fleet out of operation for a two-week period, and that has a massive impact. But it was also clear that bringing in a new platform brought back customers, and we were quite quickly on a growth path as well. Then, as most others, we were hit by Corona, which naturally brought down a big impact on the business. So in the start of Corona, we went down to an index of around 30. Naturally, people are sent home from work, schools are closed, the airport are closed, and so on. But what we saw quite quickly was that there was a change in mobility patterns. So even though a lot of people are still home, there were new types of mobility needs that we had to service. So we only had a short while sort of at the bottom, if you like, and then we grew day by day. At the end of June, we were coming out of the Corona crisis and ending at an index of 120 compared to just before Corona. So we've shown very clearly that a shared mobility solution can actually benefit from a crisis like this. Since then, we did have a summer period, smaller than usual, but now we've seen a continued growth. We reported after in combination with our Q2 results that we were able to have a break-even in our Copenhagen business. And last week we announced that as the first EV-based car sharing ever, we have a positive result in our Copenhagen business with a profit on a monthly basis of 350 Danish kroner. This has been a huge milestone for green mobility. There's been sort of doubt, can car sharing in general be profitable? We've shown that it is profitable, and we've shown it in an EV-based car sharing business. It is generally a much more expensive business to run. It is a different type of vehicle, but it is definitely also the future. So we are looking ahead for the coming month, but also coming years in our growth plans. Very simple. Green mobility, naturally, it is 100% green. We are using entirely zero-emission vehicles, only EVs. It has to be that, and it will continue to stay like that. We might use different types of vehicles, but always zero-emission vehicles. The solution we have is app-based. Naturally, that's the only way we do it today. And you can access all the features there. Our emphasis is to keep it very simple. So the focus is that you can get your mobility on demand wherever you are. It has to be very simple to use the app, but also very simple to use the car. The emphasis should not be on complexity or a lot of features, but rather to get you where you want to go quite quickly. To most people, I think it's more about where you want to go rather than how you want to go, especially on short trips within the city. We also have what we call designated hotspots. I think this is a unique part for green mobility as well, that when you are using a car sharing service, you will still need to park the car, even though the parking is included in the price. But finding a parking spot quickly is of the essence. You don't want to spend time, regardless of the vehicle, but also you don't want to spend unnecessarily time when you're paying for it. So we have reserved parking in specific spots around the city, strategically located, to ensure that you can always get to the restaurant on time, to the theater, or wherever you're going, friends and family, so on. It is about speed, but also convenience. So you don't have to worry about how you get there, just go where you want to go. The heart of the company, as I see it, is our back office, our team that handles the fleet 24/7, year-round. We are always driving. You can use the vehicle 2 a.m. Saturday night, so of course we are available as well. We have a very strong backbone that connects with the cars, of course with your app, but customer service that you can call and ask questions, I think this is a very strong point. There's always someone you can reach out to. Car sharing is still new to many people, so again, having this ease of use where you can always reach out. Data, of course, is also an important part of our business. We do gather a lot of data, but this is how we develop the business. Based on the data, we can continuously improve the company. And this is something we do in-house. We have our own tech department who, based on the data, of course, input from our customers, can continue to not only develop products, but also different combinations, new types of mobility services that will be needed. At the same time, we also use the data to optimize the fleet and to ensure that we have vehicles where it's needed. So an example is that at any given point in the city, Tuesday afternoon, we know the usual need for mobility in that area. So if we don't have any cars there, we can highlight that area with red in our office and in our customer service, so they can choose to dispatch vehicles to this area. So having this balance of the fleet to ensure maximum availability is key to our business. We don't want cars, of course, in places where there's no business. Yeah. Being green, it is part of our name, but also a true core of our company. We like to say we were born green. It's the natural thing for us. I think for all my colleagues in our team, it's just something that is inherent. Maybe don't even think about it. But of course, this is something that is key to what we do. I think it's very key to the society and the cities that we are in. So we work closely with UN Sustainable Development Goals. We have specific actions for goal 11, 12, and 13 that is the ones that are most relevant for what we do. But that we can report directly on actions and results taken on all three of them. Same way, on an ongoing basis, it's part of our ESG program. The most sort of obvious one, of course, is that we have the measure of CO2 saved, but we also look at NOx levels. We look at a lot of other things. We look at noise, and also how can we contribute beyond our own fleet in reducing the emission of greenhouse gases, but also other gases that can impact the society. And a way to measure this, I think for us, in doing this and working with CO2 emissions, it's usually something where for most people it's very big numbers, it's on national level, and to most people this is hard to understand. What can I actually contribute? How will I impact this? What changes can I do in my everyday? So we actually put that down to something that's very specific and concrete. And in an average trip with our cars, you tend to save at about 1 kilo of CO2 emission. And then you can say, okay, what does that actually mean? That's the equivalent of 3 cups of coffee. So the trip to the coffee shop, well, if it's done in a green mobility car, you've offset the emissions that your coffee is putting into the air. So it is about small things. It's small steps that we can do every day for our customers, but it also affects the business and how we can grow. Looking ahead, as I mentioned before, we are operational in 4 cities currently. We have 3 more cities in planning that will be launched this year, but the potential is much, much more. We've proven the business in Copenhagen. We also expect that the business in Aarhus will become profitable within the next 12 months. And after that, of course, the Swedish cities will follow. But in our mind, we've only in the beginning of this. We've proven a profitable business. Now it's about scaling. When we look across Europe, and for now, Europe is our focus because there's enough cities. We have about 160 cities with more than 250,000 inhabitants. So the market opportunities are, well, not endless, but there's a lot of possibilities out there. And I think there's another difference we've seen. When we started 4 years ago, we were looking at cities with 1 million or more. Now we can actually make car sharing operational and profitable with just 250,000, 250,000 inhabitants. So that has also increased the number of cities, increased the market size for us. We are, of course, not the only one. We do have competitors around Europe. We do see other companies, but most are still operating with traditional cars, not entirely EV fleets. And even though it seems all that simple, you can just swap the vehicles, it's not as simple. So we actually do have a competitive advantage. There is a difference in operating traditional cars versus electric cars. And it will take them amount of time to catch up on that. And then even when we look at the current competitors, I think to one extent competition is good, but we also have to look at this is still a new industry. To take an example from Copenhagen, we, together with our competitor, operate around 900 shared vehicles, but Copenhagen has 120,000 cars entering the city every day. So this is about building a new market, the future market for mobility in cities. And we see similar numbers if we look at Berlin, Hamburg, and throughout Europe when we compare to the size of the cities. So the market is there. There's been a number of studies made on how shared mobility will grow. So we are quite confident. We are looking ahead. We are ready to grow the business. And the business is essentially very simple. When we go into the new city, we know the cost levels. We can forecast that quite precisely. We know the holding cost of the car, leasing, parking, damages, and so on. So it will have a curve, and this is maybe even not correct, because now we actually expect that the cost level curve will drop in time. Electric cars will drop in price. We've seen that already in the past few years, so the curve will get better. The challenge for us is, of course, to build up revenue, meaning customers, number of trips, and do that fast enough. When we launched 4 years ago, we estimated that it would take us 3 to 5 years to become profitable in a city. Today, we can narrow that down to 2 to 3 years, depending on city size. So we've perfected the business. We've improved time to profitability, and of course now it's still a matter of can we move this marker even further. That we do in some cities where we work actively in partnerships with, it could be an energy company or something else, where there's a marketing corporation that can bring in customers faster. So the business is accelerating, and some of the factors that we see here are, as I mentioned before, electric cars are getting cheaper. More and more OEMs are producing electric cars. Again, when we started, we had maybe 3 cars to choose from. Today, possibly 20. In a few years, 50 or more models to choose from. And at the same time, prices are going down. As we grow in scale, of course, we do have other positive impacts in the business as well. And another part, we're looking at how can we utilize the vehicle. Of course, we see traditional use throughout the day. You go to work in the morning, you go home in the afternoon, you go maybe to a few meetings during the day. That's where the car is typically used. But it could also be used at nighttime when, let's say, private people are not using it. We already have a cooperation in Copenhagen with Volt, delivering meals in the evening. So their staff can use our vehicles at a reduced rate, but it's at a time where we usually don't have the same sort of occupancy in the fleet. So finding ways of having the cars used more. And naturally, with more cities, we have bigger scales. It will have an impact on our buying powers when we sit down with OEMs and need more cars. And ultimately, it also leads to a reduction in investment going into new cities. We've seen that already. We've perfected a lot of things in operations, but also in our platform. And I'm sure that this will be able to be brought down further. When we look ahead, our aspiration, of course, we see that the green focus is creating sustainable mobility for private, but also for shared vehicles, this has had an increased focus with politicians, but it's also a need in our society. We have to have a better environment, which means lower CO2 emissions and fewer private cars in the street. That is something Green Mobility delivers, and also why we have a clear aspiration of being a leader in shared mobility by 2025. And with this, I conclude my presentation.
Thank you, Anders, for the very interesting presentation. Maybe a few questions from my side. The first one being, as you mentioned, car sharing is still very new to many people, and your biggest competitor is essentially, by and large, private car ownership. Could you talk about some of the cities which have implemented share mobility? Now I'm thinking, for example, Berlin, which have used it for many, many years, and what effect that has on private ownership. You mentioned this, one EV replaces 4 private cars in your PowerPoint, but could you talk more specifically about, what you're seeing when you introduce mobility solutions on sort of the overall effects of transportation?
Sure. You're right, Berlin has been sort of a center for shared mobility for quite some years. But still, if we look at Berlin and compare it to let's say, Copenhagen, the adaptation is more or less the same. Remember that Berlin is probably around 5 times as big as Copenhagen. But it has changed people's sort of habits in an everyday life. I think more and more people are becoming aware of the cost of ownership when you have, especially if you live in or close to the city. That you have to buy the car, whether it's a down payment or you lease it or whatever you do, insurance and so on. When we look at young people today, and Berlin is actually quite a good example of that as well. A few years ago, young people, car ownership was about 28%. Now it's down to about 3%. So whether young people are smarter than my generation, I don't know, but at least they are much more conscious about the other opportunities that are there. And why own a private car when you live in the city? There are so many other things that you can use your money for.
It obviously costs money to grow in such a sort of rapid expanding market. And you did 2 share issues or 2 share emissions last year of around 30 million DKK each, and you're flagging for a new one in the second half. Could you talk a little bit about the share issue which is pending, the size of it, and perhaps even your plans in terms of entering the main listing of the Copenhagen market next year in 2021?
Yes. We did initially expect to transition to the main market in Nasdaq this year, but due to COVID, we chose to postpone it. We simply see that the opportunities for doing that and successfully is better placed for next year. But naturally, as I mentioned, we are a growth company. It will require additional funding to scale the business to much more cities. And it is also an element of timing. We've proven that the business can be profitable, but if we should sort of wait for all cities to become profitable and then go into a new city, we will lose the market entirely. This is a time to market where we see maybe 3 to 4 years. It is about getting out and controlling as many cities as possible. Therefore, we also will require additional capital to continue the growth. And as you point out, we are planning to raise additional capital this year in the manner of somewhere between 50 and 100 million Danish kroner.
That's very clear. And finally, a last question from my side. When we look at the price of using mobility solutions, those have been coming down while you have been initiating new packages to essentially more effectivize your fleets and get more activity in your cars. Could you talk about these packages and how they have perhaps led you to a break-even or even a profit territory in Copenhagen? What type of packages are these in order to more effectively use your cars in Copenhagen?
Sure. I didn't bring a slide on that, but we did, in addition to our standard price where you pay by the minute, we also offer different packages. Historically, we've done that for a day or 24 hours, but before summer, we introduced several new packages where you can have the car for 2, 3, or even up to 7 days. This was actually some we saw from based on our data, as I mentioned before, but also specific requests from some customer groups. And at the same time, we also saw that typically in the weekends and when you have national holidays, summertime, we tend to have a drop in our usage because people simply went out of the city. But this was still people who didn't own a car, so why shouldn't they be able to bring a green mobility? So we introduced the new packages to the market, and we've seen a very successful uptake in that, where people have taken the car out for a week or a couple of days or whatever. Naturally, this impacts the average price. I mean, if you have a car for a full 7 days at a fixed rate, then the average minute price will drop. But on the other side, we see usage of the fleet. We see new customers coming in and different types of usage of the fleet. So all in all, it's a very positive thing.
Super. Thank you, Anders, for being with us today, the first time you're joining this seminar. I wish everyone who's listening a very good day from my side. And thank you, Anders, once again.
Thank you, Laurits.